The market has definitely been experiencing a little bit of chop recently. Yesterday, we saw some huge sell-off at the beginning of the day and a slow kind of recovery. Today, we saw something similar, a very sharp sell-off, nothing deep, nothing like 3% deep, but very sharp and very aggressive. You saw SPY put options spike dramatically in price, so there was definitely some fear out there. And I think it's pretty warranted. We're at pretty high levels. People believe that it's possible there is a bubble. There's a lot of talk about there being a bubble. But I don't think there is a bubble. And I kind of want to start talking about what else I saw going on today and then kind of get into the more macro forces that I believe are preventing a bubble from happening and being burst. I think it's impossible for this bubble to be burst. If you look at a stock like Intel's been a very much hated on stock. It's been very flat, but it's very well priced, as are lots of areas in the market, and we've talked about them: energy, real estate, gold, various other commodities as well. Intel saw strength today and saw strength continue after this midday sell-off. Now, Intel is a stock that has been hated, so people could say, whoa, in a time of uncertainty, I don't want to go into a stock that's hated. But they didn't do that. It's a blue chip. It's reliable. Intel had a fantastic day. There's still cash on the sidelines, and it's continuing to look for value and good places to park itself. And a lot of it seemed to be okay with Intel, which is an area of the market that's been hated on for quite some time, but appears to be okay now all of a sudden after some sort of daily sharp sell-off. So I think things are going to be okay, and we'll kind of see what happens with that. As for these macro forces that are continuing to propel the market and prevent some sort of bubble, well, we heard Jerome Powell yesterday essentially say he plans on doing nothing. And nothing means pumping money into the bond markets, and they are becoming increasingly less attractive investments in terms of total return. It's starting to reverse now, but if we're looking at real terms, they're starting to not look so great because we think there's going to be some inflation. So as bonds become less attractive and there are some inflation concerns, that massive pile of money, because there's an enormous amount of money in bonds, will rotate into stocks. And sorry, I found it 20%. And that just means more people looking to buy stocks and looking to buy positions like Intel, which is good for the overall stock market because these are the areas that present themselves with good value. DocuSign, all that stuff is yesterday. I mean, literally. Like last year kind of stuff. It's seen its day, in my opinion. It's a good company. It'll be around, but it's very expensive. There are lots of areas in the market that aren't so expensive that should be continuing to do well. So we've got Powell. We've got additional stimulus, which has the same effect as Powell. And we've got inflation, which is going to happen as the cost of all of this and will present, an increasing weakening dollar, increasing stock market valuation kind of dynamic, which will continue to present, further growth in the stock market. And we have yet to see this earnings expansion, margin expansion, cost cutting, etc., take place in a normal economy, which I think will excite people quite dramatically. And that's a fundamental force. It doesn't have anything to do with, money supply or any of this crap. So I think it's going to be good. Maybe we get some sort of sell-off. It seems like the weak hands are out there. And maybe they break for a brief moment before, this money that's just looking to park itself comes and buys stocks at a discount. So we will see what happens. And until next time, peace out.